how to make six figures by knowing how to find the right deals in this economy. Let's get into this thing.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What's going on, Cliff? How you doing, big time? You all right, brother?
Doing good, doing good.
Good stuff, man. Good stuff, man. We up in this thing, man. Get it in with the people, man. I don't know what's going on with my thing, man. But y'all see it. Y'all see that thing, man. We're looking oh so clean, man. Welcome to Real Estate Live, man. We get it in with the people today, man. Cliff, brother, how was the week, Doc? Holla at me. What's going down, baby?
Good week. Good week. You know what I mean? I'm already yeah. It's we're starting to see a little bit happening in Dallas. I'm starting to see some pockets that's growing real fast in this areas, but good week. Good week. How was your week?
It was good, man. A little challenging, man. But you know what? When there's a challenge, you know, we always step up to the plate. Man, we trying to get it in with people, man. It was good, man. It was good, Doc, man. Uh-oh, did we lose Cliff? Uh-oh. I think we went.
You see me?
You frozen a little bit. You frozen. You made the log back out, log back in. You just froze all of a sudden. We don't know what's going on. It's all good, y'all. We do this thing on the fly, man. On the fly, man. Man, it was a good week for your partner, Cliff Made. You had to log back out and log back in, guys. We have a good subject for you guys today, man. You know what I'm saying? But before we do that, all the time, before we do that, guys, what we're going to do is I'm going to bring Cliff back. Before we do that, guys, real quickly, we're going to dive into our current market analysis, guys, okay? You know where we go to when it comes to that whole ordeal there. We got to go to our people, man. Our mans and them, Doc, because they give us wisdom real quickly. Cliff will be back in a second, guys. There we go. Boom. There he is. There we go. We don't know what happened, Doc. Can't hear you. Can't hear you. Can't hear you. Can't
hear me?
Now we can. Now we can.
Okay, all right.
There we go. All right, y'all. All right, y'all, man. Again, guys, good week. We got the bag. Let's get into the thing, man, guys. We know where we begin. We begin all the time with the current market analysis, guys. And you know we have to go to our partners, man. PBD and them, brother, at the Valuetainment team, Doc. We're gonna dive into what they talk about when they came to the Fed chairman, talking about him actually raising some rates, and also some other news came out that kind of shocked people today as well. Also, so Cliff, man, we're gonna listen and respond. If you have anything you guys want to ask us in the chat, no matter what platform you on, guys, we're on all platforms. Ask the question. Let's get into it, Cliff. Let's go get it.
Fed chair opens door to faster rate moves and a higher peak. Okay, a higher peak. Powell's comments were that the clearest acknowledgement yet that the recent reports showing inflation remains stubborn and that the job market remains resilient are likely to shake showing inflation up the policy trajectory for American central banks. Powell suggested that the peak rate projection of 5 to 5.25 for interest rates would need to be adjusted by more than that without specifying how much more. Tom, how bad is this going to get?
We said it was happening, and it's here.
Yeah.
Right now, just for everybody's reference, the federal rate is 4.75.
Wow.
4.5. It's in a quarter point span, the way they do it. Okay. And what that means, that's what banks borrow the money from, and then they turn that into car loans, mortgages, and things like that.
Yeah.
At the beginning of the year, Pat, people thought that the rate increases were going to stop probably around May or June.
Yeah.
And then start getting some reductions.
Yep.
So that car loans would be more affordable as we hit back to school. Mortgages may be more affordable fourth quarter, third quarter. That's what people thought, that the first half of Tale of Two Cities. First half of 23, kind of tough. Second half of 23, things getting better, a little bit of sunshine.
Yeah.
Well, economic data came out and it looks bad. It looks like inflation is really hot and not being tamed. In the last podcast, we talked about Larry Summers said, hey, the Fed's really behind the curve here. They got to make a move.
Yeah.
And guess what? Jerome Powell yesterday said, we're going to be raising rates. He won't say how much, but everybody is basically, and the market has reacted, everybody saw the market down, that it's going to be a 0.5 point in about a week on March 22nd. What they're worried about is that it'll also be a 0.5 point on May 3rd, and then a 1/4 point in June, a 1/4 point in July. So that is a 1.5 points that would take it not to the 5.5. Remember, everybody's thinking 5.5,
Yep.
but all the way to 6, maybe 6 1/4.
Ooh-wee.
And so with those rates up, mortgages just hit a wall. We covered it on the last podcast, a 28-year low in the number of mortgages per week. 28 years. Wow. That's phenomenal. And so it basically translates to car loan percentages, interest rates are not going down anytime soon, probably not until fourth quarter, the way this is looking. Because
I want to show you this. If you can play this clip with Jerome Powell yesterday.
Cliff, before we go into the clip with Jerome Powell real fast, we got a question on Instagram real quickly, guys. It's just from Sammy. It says, I was asked to lock in a 5.99% rate from my mortgage broker. What do you think? With what we just heard, Cliff, would locking in a 5.99 be wise?
Yeah, I'd do it.
Yep.
And the
I
market
would as
went
well.
today, I'd lock it in.
Hey Sam, lock that in, brother. That 5.99, lock that in now, because as you just heard Patrick talked about, rates are going to continue to go up, and you're going to see in a second how the thinking behind what the Fed chairman is saying. Now, Cliff, in your opinion, I'll wait to ask that question before we actually hear what he says. So, Sammy, lock it in. Soon we see you, baby, on Instagram. We see you, baby. Here we go. Let's see what he says here.
Yesterday, him and Senator Kennedy going back and forth. And what's important about this is 3 minutes and 45 seconds. I asked Elon if he can speed up the stuff on Twitter. I don't think they have it yet to do the playback speed. I think you just have to play it at the speed that they have. But everybody has to watch this exchange. Watch this. Typically, when you see these things, what do you think about? The guy's not going to admit to anything. Yeah. He's going to play bullshit. He's going to play dumb. He's going to play this. Watch what Powell does. He doesn't stonewall. He just tells you, yep, that's what's going to happen.
You're looking for a
that's what's going to happen. There is zero fluff answers here. He straight up gives it to you. Play the clip. Watch this.
Anti-fluff.
You're raising interest rates.
Yes,
You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the unemployment rate. Is it not?
Yes, one of the measures.
Okay. So in effect, I'm not being critical. When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not wages.
You're trying to raise the unemployment rate.
There are a lot of
I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate, are you not?
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through a bunch of channels, like, for example, just job openings.
All right, let me put it another way, okay? The Economist did a wonderful study. They looked at 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
Yes.
In other words, prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay. Based on history, in the 10 times that we got inflation down, disinflation since the 1950s, in order to reduce inflation by 2%,
You're about to say it.
unemployment had to go up 3.6%.
Watch.
Now, that's history, is it not?
I don't have the numbers in front of me, but yes, the standard has been that there
Not
have been
fighting.
recessions and downturns when
Okay.
the Fed has tried
Watch
to
how
reduce
this
inflation.
ends. What
right now,
number?
the current inflation rate 6.4%, and the current unemployment rate is 3.4%. Now, if history is right, I'm not asking you to again blame anybody, but if history is right, unless you get some help, in order to get inflation down from 6.4% to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
That's what the record would say.
Okay. And to get inflation down to 2.2%
Watch this.
based on history,
Here we go.
an immutable fact,
Watch.
unemployment would have to go to 10.6%.
Wow.
Would it not?
Oh,
And I wouldn't.
That's what the
Yeah, of
record
course you
shows. That's what
wouldn't.
the history shows.
Watch.
Yeah, I don't think that kind of a number is at all in
I
play
mean,
here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable.
Wow.
It's undeniable
Wow.
that the only way we're going to get this sticky inflation down is to attack it on the monetary side, which you're doing, and on the fiscal side, which means Congress has got to reduce the rate of growth of spending and reduce the rate of growth of debt
you do.
accumulation.
Yes,
Now,
you do.
Yes. He's correct.
I get that.
Yes.
You don't want to get in the middle of that fight. But the more we help on the fiscal side,
Yep.
the fewer people you're going to have to put out of work.
Yep.
Isn't that a fact?
Please answer.
Could work out that way.
Could
Sir?
work out that
Wow.
way.
out that
Yes,
way.
sir.
Yes, sir. Thank you.
Thank you, Senator Kennedy. Senator Reid of Rhode
Pause
Island.
this. Watch
Yes, sir.
Zero hiding anything. Now, here's the thing.
Wow.
Kennedy is a what? He's a Republican, right?
From Louisiana.
Jerome
Okay. Let's come back to us real fast, Cliff. Let's go back to us real fast, man. All right. Okay, we got a little commentary there, man. Okay, Cliff, bruh. This is people like these discussions with me and Cliff, man, because we go back and forth on different ideologies and concepts. We kind of go to the same destination, different ways of getting there. In your opinion, in that whole exchange, what do you think was going on there? I'll let you partner.
He's just pointing out the history of what happens when the Fed starts raising rates.
Uh-huh. Yeah.
And
Go ahead.
it's an inverse relationship.
Yes, sir.
If things are more expensive,
Uh-huh.
people spend less. If people spend less, business goes down. And when business goes down, people get unemployed.
Yes, sir. You spot on, Doc. So let's go to the political side. Then you had Senator Kennedy, who is a Republican, did said that
Right.
there's two sides to this. There's a political side, which is policy, and then you also have the fiscal side, which is the Fed. He's saying that he's attacking inflation the right way. Would you agree?
Right.
I agree with that as well. What has not been happening is on the political side. Would that be correct?
100%. Yeah.
So Senator Kennedy, from a fiscal standpoint, is saying that we in the legislature who controls the purse has to stop spending so much damn money and allow for you, Fed Chairman, to do your work, correct?
Yeah.
That ain't gonna happen, is it?
But nah, because how did we get in the? Let me ask you a question, Dale. I'm gonna ask you a question.
Holla.
How did we get inflation?
Too much printing.
By who?
By Congress.
So if they print too much and
Yeah.
that causes inflation, you
Yep.
need to not print
Preach the gospel. Preach the gospel. So
to bring inflation down.
That's right. So what Senator Kennedy was pointing out at a 7 and a 10% unemployment rate, that's real. That is predicated upon the both sides doing the proper roles. The policy side, which is the political side, stop printing so damn much and allow for the Fed to continue to raise the rates to curtail inflation. Would you agree?
I agree, but this is where we're gonna split.
Yeah.
All right. What I think is the Fed has already raised rates enough to cause all the damage they need to cause. I don't think they necessarily need to continue to keep raising rates aggressively to hit their goals. And the reason why I say that is we've had 4 months.
Yeah.
The first 3 months, inflation went down. It was at 9% at one point. You remember that, right? 9%.
For sure.
It's at 6 now. That's because it went down 3 months in a row, and last month it popped up a little bit.
Okay. Hold on a second. I was waiting. So hold on, baby. Let me get this straight.
All right.
Let me ask you this question, Cliff. Was it really because of? Well, I can't say that. Yes, the Fed did their portion, but also, Cliff. Let me ask you this question. Did the curtailing of inflation, in other words, it's going down, was also the action of the consumers not spending enough money because things went up in price point?
Now, well, because a little bit, but if you look at credit card usage, it's high. Consumers are still spending. So
right there, hold on. Now they're spending. So what's happening is because of the cost of goods, Cliff. People's savings is going down, right?
Right.
But the credit card debt is going up because of the fact that the cost of living is going up. So inflation is outpacing their wages. So what did the consumer do? They actually manufactured a pay raise by borrowing more on their credit cards. That's why we see a record amount of credit card debt being up, right? And savings being down. Would that be accurate?
100%.
Gotcha. So my thing is this here. I got to ask that question again. Was a part of the equation for bringing inflation down from a month-to-month basis, because really inflation is gauged on an annual basis, right? But on a month-to-month basis, right? Was a major part of the formula people changing their behaviors because they had to, because inflation was outpacing their wages?
I think that's taken into account.
That's
taken into account. Okay. Yeah, I'm not saying that's not happening. What I'm saying is this is what I think is basically what's going on, right? We overspent. Obviously, we had inflation going like crazy. Now that rates are higher, what's happening is segments of the market are being affected drastically. Some parts of the market aren't really affected that much at all. They're still doing decent. They're still in sectors that are doing fine. You look in the car market, that's dislocated. The numbers don't make sense. I think the average price for getting a car, if you were to purchase a car, your monthly payment is sitting around $750, $800.
For sure.
A month.
For sure.
Which is
For
crazy.
sure.
I think that's the average price.
Yeah. Yeah.
So I think you have a dysfunctional market.
Yeah.
But I also think the Fed, if they continue to raise rates, is going to break something. And it already started. I talked about the cars, and I let everybody here, go look up Silicon Valley Bank.
Oh, I got you, baby. Don't you worry. We got it right here, baby. Y'all, some news came out today. You know what I'm saying? Let's go over here real fast. Where did it go? Where did it? Oh, here it is. Here it is. Let's go over here real fast, y'all. Let's make it a little bigger for the people. For the people. Y'all, today, something sizable happened today. Here we go. Cliff, what that say, babe? What that say now? What that say? What that say?
Silicon Valley Bank. Seized after run by depositors. That is AKA a run on the bank.
Yes, sir, Doc. It's a Silicon Valley's bank's failure came from incredible speed with some industry analysts on Friday. That's today, right? Today. Suggesting it was a good company and still likely to it's still likely a wise investment. Let's keep going. New York, the U.S. rushed to seize the assets of Silicon Valley Bank on Friday after a run on the bank, the largest failure of a financial institution since Washington Mutual during the height of the financial crisis more than a decade ago. Silicon Valley, the nation's 16th largest bank, failed after depositors, most likely technology workers and venture capital-backed companies, hurried to withdraw their money this week as anxiety of the bank's situation spread. So there was a run on the bank. Cliff, explain it to the people, Doc. What's going on?
And I want to. Here's a little bit of information too. I found out not about this bank. This started in Europe early this morning because 4 of the largest institutional banks in Europe started to have these same problems.
Wow.
That fed into this morning with Silicon Valley Bank. So let's break it down what a run on the bank is. Most of y'all think your money is in the bank. It ain't. The bank does not have your money. What you see is digits on a screen. The bank ain't got it. Those are IOUs.
Yes.
So if me, Dale, and all y'all went into the bank and said, we want our money today, they ain't got it.
Nope.
And that's when, as you see with this bank, the government's got to step in and take over because the bank does not have your money.
Yes, guys. This, in my opinion, is going to may become a normal, something normal to do. If it happened in Europe earlier this month, right, and now it's flooding over to California, Silicon Valley, guys. Silicon Valley. This ain't Paris, Texas. You know what I'm talking about? This ain't no Harlingen, Texas. This is California, Silicon Valley, right on the bank.
And I went into a little bit, but let me tell you what's happening. Dale, you know they're raising interest rates, right? Mm-hmm. Those are just returns for large investors who buy bonds, buy treasuries. So let me ask y'all, how's the stock market doing? It's down, right? How's real estate doing? It's down, right?
Yeah.
So if the Federal Reserve is saying we'll give you 5 or 6% return on your money, guaranteed, why would you have it in the bank? Why would you have it in real estate? And why would you have it in the stock market? You wouldn't. You'd pull all your money and buy treasuries and bonds so you can get that guaranteed 5-6%. So now the Fed's got a problem. If they continue to raise rates, everybody's going to pull their money and buy bonds. You're going to have more runs on the bank.
Exactly. Now, we had a question on Instagram. It says, how many deposits do they have? Well, they don't give us the number of deposits. Fenton, they actually give us the number of assets. It was 209 billion?
Right. 212 billion, I think.
In assets, yeah. Were seized by the government. 212 billion, guys. 212 billion. This is the 16th largest bank in the nation. 16th largest bank. So it's not a small bank. It's not a small bank. It's not a Chase or a Wells Fargo by no means. But it's not a small bank at all. At all, guys. And the thing about it is now, why would they seize that money? Or why would they seize the bank? Because, again, it was venture capital. It's Silicon Valley. So there's more money than what the FDIC would actually insure in there per depositor. So the depositors were like, I ain't liking what's going on. So they ran for the hills. What happened then is the Fed said, oh, hell no, we got to come back in and step in. So, guys, I believe, Cliff, this is going to become the norm in a lot of areas. You agree or you disagree?
I think the Fed, this is going back to my original point, right? The Fed is going to have to break something on one end or the other. They're going to have to accept longer duration of higher inflation.
That's correct.
Or they're going to keep raising rates and they're going to break the system because the system is not built for high interest rates.
But Cliff, I think, though, they're going to have to do that because, to be honest with you, the policy side, which is the legislature branch, will not stop printing. You just actually heard the White House come out with their I think it was a $4 trillion budget. $4 trillion budget. The printing's not stopping, guys. It's not. So if that's the case, the Fed's going to have to break this thing. So I believe hard assets as well as a strategy is the key. Hard assets and strategy. Would you agree, Cliff?
Oh yeah. You got to have hard assets. And man, Dale, you're right though. If they continue to print money, rates have to go higher. If rates go higher, get prepared.
So if that's the case, then you're looking at a 7 to 10% unemployment rate. That's coming. That is coming, guys. Sam on Instagram says, it's starting to smell like 2008? Sam, worse.
Yeah, it would be worse.
2008 was centralized in just the insurance, really the real estate market, but also the insurance market. It was centralized there. This one is totally different because it is spread out over all the industries, not just a couple of industries. Does that make sense, Cliff?
Yeah, I see. It's worse because if you have persistent inflation,
Yeah,
it feeds on like there's nothing we could do to stop it. In
Nothing.
2008, it had a crash, and then we started to recover. There is no in this one. In order to get the interest rates where we need to, or the inflation rate where we need to, it'd be more devastating because it'd be deeper and for longer.
Exactly, guys. So I tell you guys, man, if you are on Instagram, I'm sorry, if you're on any other platform, Rumble or YouTube, I did a kind of move live yesterday. But what I'm doing, guys, is people have a lot of questions that I get asked a lot. Me and Cliff get asked out a lot of times. Hey, guys, again, if you're on Instagram, I'm sorry, YouTube or Rumble, okay, there's a QR code, right? A QR code, right, for you to scan. But if you're on Instagram, you can go to the link in our bios, okay, and get on our calendar and ask us the question, because you have to have a hard assets with a plan is pivotal. Okay, you're seeing the QR code on other platforms and on Instagram as well, but you can't scan it on Instagram, guys. Okay, just go over to YouTube or click on the link in our bio or DM us and ask us some questions, and you can get on a calendar and we'll sit down and walk through a strategy with you, because it's getting real. It is getting real. If you don't have a strategy, you're cooked. And Cliff, let me ask you another question real fast, man. Let's go back real fast. If you having bank runs now, what's the likelihood, Cliff, that a stock market crash is on the horizon?
If they keep interest rates high, yeah, you're gonna have it. I think Powell's gonna blink. I've been on that for a minute. I think you could see, we got CPI data coming out, I think next week.
Mm-hmm.
If that comes in lower, I think you'll see the Fed go 25 basis points or possibly hold. Really, that's what we're hoping for. We're hoping that the CPI next week is lower. If it's not, this is just the beginning.
Gotcha. I am betting that Powell was going to raise his rates up, because I think he put in a falsified inflation rate of 2%. That's never going to happen ever.
Yeah, I agree.
It's gone. It's gone.
I agree.
That is a PR stunt. That's why it's a PR stunt. But it's also a PR stunt to actually kind of shield him, because of the fact that he could say, my goal was 2% inflation rate, which is the norm, but wouldn't able to reach it. So I have to raise it up. So he shields himself and the shield of the Fed as well. Question on Instagram. So is cash king? Whew. Cash is king as long as it's parked in the right environment. Let me say it again. Park means that you get access to it fairly quickly. All right. So if cash is in the bank, we just saw a bank run. Is it wise to have cash in the bank right now, Cliff?
No, yeah. I mean, if it's in a regional bank or a small bank, that is going to be more susceptible.
Yes. I would flow it through, I say every time, a life insurance contract, and then borrow that money out and then put it in the bank. So that when you borrow it out, you're making 10%. You're borrowing at 3, you're netting 7 there, but your money's in a compound interest environment and protected from any market risk at all, because they just marrying the S&P 500, right? It's not actively invested in the stock market like a 401k or IRA or Roth IRA or 403b. But you borrow that money and put that into your bank account, and so the life insurance money is in the bank account, not yours. Yours is protected. That makes some sense. right?
Right.
We get a lot of questions.
And you could also get a money market account where right now you can get about 4% guaranteed.
Heck yeah. Heck yeah. But 4% to me is a terrible return because you can generate a lot higher just putting in a life insurance contract. But then if you couple that with real estate, oh my God, you're looking at double digits returns easy. Easy. And we're gonna show you how in a second. But man, we got more questions coming in on Instagram. We're getting killed on Instagram. Is that I think they're getting ready to collapse the current monetary system in exchange for a centralized system. I agree because I believe President Biden signed an executive order for them to look at the Fed coin. That's coming. I told you guys this 24 months ago. It's coming. It's here now. And so they can't stop printing. They can't stop printing at all. They can't.
No, I
They
think
can't stop printing at all.
Yeah, Japan already set the model for that. You can continue to do that. I don't know if there's going to be. It's tough. I don't think the monetary system is going to completely crash. I don't. I don't. I think it could get bad, but I don't think it's going to crash. I think it's going to be a tough situation to reset.
Yeah, specifically if the legislative branch is not going to stop printing. They're not going to stop printing, Cliff. That's why I'm leaning toward they're trying to crash it. It's not going to stop. They can't. They can't. If they stop printing, it crashes faster. They can't stop printing. That's the reason why the Fed chairman is saying what he's saying. He's not bullshitting. I don't believe he's bullshitting. I believe he's been 100% accurate.
It's gonna be interesting. This is not 2008. This is different. This is a different monster.
Hell no, it's not, guys. It is not 2008 at all, guys. Again, they're running on banks in the U.S. now. Let that sink in. They're running on banks in the U.S. The FDIC had to seize Silicon Valley Bank in California.
But I'm trying to. Why though, Dale? Why are they running on that bank? It's because the interest rate, you're getting such a return in the money market accounts. You're getting 4, 5, 6%.
Yes.
Why would I keep my money in the bank if the government's guaranteeing me?
I agree.
So if the Fed raises it again, now you're talking about I can get 7% guaranteed from a treasury. Why would I have stocks? Why would I have cash?
And if that happens, Cliff, oh, this is good. Remember, the velocity of money has to be flowing in the market. It has to be flowing.
Right.
And so if money is stationary, guys, what Cliff is saying, what Cliff is saying is if the Fed is paying me 7% or 4% or 5%, why would I put my money in the stock market? Which means money's not flowing. It's not flowing. So the Fed is so the Fed is saying we gotta raise the rates up to stop this. But you have the politicians printing more money to try to manufacture cash flow. That's a recipe for the disaster, guys. I'm trying to told y'all, man. I'm trying to told y'all, guys. Playtime is over. It's over. Stop playing. It is over, guys. Again, if you have any questions, click on the link in our bios, guys. DM us if you're on Instagram. But if you're on Rumble or YouTube, there's a QR code there. Scan on it, guys, and get on our calendar, and we'll answer any question that you may have, guys. All right? Because we get asked a lot of questions. All right, guys. Let's dive into this real fast. Let's dive into, in this current market, how to find the right deals in this market. Now, Cliff, I always say this here. We have a 3-pronged attack here. Insure, leverage, and protect. Okay? Let me say it again. Insure, leverage, and protect. With any type of model, you need to have those 3 things hit. All right? So, Cliff, man, go into the first portion, man, which is the geography, which is the insure. Go ahead.
So that's going to be on the location. Y'all already know, everybody says it, location, location, location. Now, when the market's down, that's more important.
Yes.
You want to find the right areas where so just to give you an example, I'm an appraiser. we still have areas where the market is sideways.
Yes.
We have a lot of areas where it's going down,
Mhm.
but there are some areas where it's going sideways. The reason why, we have good school districts. The properties in those areas are high demand. So you want to find cities, housing locations within, you don't want to be too far on the edge of a street. You want to be in the middle of the street. Those
Yeah.
are more important than they ever have been, because the market we're in today. Because I'm telling you, the amount of buyers out there is probably a third of what normally is out there. I would say 70% of the market, the buyer's market, is gone.
Gone. And they ain't coming back. Not right now. How long do you think we got, Cliff, to this thing kind of hits the bottom? 36 months? 24 months?
I'll be honest with you, Dale. Nobody knows. Nobody. The Fed don't know. But
They don't.
you tell me what you think. How long you think?
Man, I don't know, because there's one variable that we can't plan for, is the legislative branch will not stop printing, because they can't. They can't. I believe this is going to be the greatest shift in wealth in the history of mankind. The history of mankind. All right. Number 2, man, consistency, leverage. Now, why we say consistency there? Because, Cliff, unpack consistency real fast for them, Doc.
Consistency is, in another word for it, is repetition.
Yes.
Right.
Yes.
You want to be able to find something that works and then repeat that process. And so and this is something that we go into. We got a cash flow club that we have, where we kind of we discuss this, and we go into it about what you need to be doing on a consistent basis in order to continue to get consistent results.
That's correct. That is correct, guys. That's correct. For us, guys, more than ever, education. I tell everybody, double down on your education right now, because what you thought worked in the past will not work right now. We got to think entirely different. That is myself, Cliff, a Robert Kiyosaki, a Patrick Bet-David, a Matt Topola. You can name somebody. It doesn't really matter. You got to really retrain how you think. We're looking at investments different. Would that be right, Cliff?
Oh yeah. I mean, I'm lowballing. I'm throwing low
all day long, guys. And let me just let you know how we can actually do it low, because of the fact that we're looking at 2 apartment complexes in East Lansing, Michigan, right? 2 big old apartment complexes right now, guys. If they ain't ran like garbage, they ran like terrible. Now, what me and Cliff can do is we can actually negotiate a better price point that works for us and the seller. But we're not in a rush to buy, because we don't have to. That's how consistency is so key, guys. Be consistent so that you attain the proper leverage, because you want to negotiate as if it's going to get worse in the economy. Be more aggressive on the front end negotiating, right? So let's go over to the last one. Once you, on the protect side, which is the last thing here, this the lending portion. That's what I love. Is once you are very good at negotiating in the leverage side, you can then position the right joint venture partner, lending terms, whatever it may be, for you to begin to acquire property at the right price point. So you can properly value add, and then position yourself to be able to cash flow over and over and over and over again. Does that make sense?
Right, exactly. You want to be able to, again, it's just that repetition piece again, and be able to find the right team to be able to work with in order to be able to repeat that.
Yes. That is it, guys. It's real simple. It's not hard at all to do that at all. How you doing? We got Nick. Hey Nick, how you doing? Said, hey Cliff, how you doing? Good to see you. I would say this here, guys, is once you master this, the leveraging section, the lending portion becomes easy, because you have the numbers are so good. Again, money's attracted to value, and you determine value by how you leverage, negotiating. That's how you determine the leverage, the proper value. Then the lending comes easy. Hey, I got a deal. Think about it, Cliff. You got a deal worth $250. You buy it for $100,000. You putting $25,000 into it. You know what I'm saying? You all in $125. That's some pretty good numbers. Would that be correct?
Oh yeah.
Come on, guys. It's simple. Negotiate harder. Okay, harder. Okay, master the leverage portion, and the lending, the protection becomes extremely easy. Finn said, "Thank you, Liddell, and you, Cliff. May God direct you." Oh, thank you so much, guys. Appreciate you guys. But guys, that's all I realistically had, guys. Again, I say this here is more than ever right now, guys. Re-educate yourself is so pivotal now. Okay, so pivotal now. So joining the Cash Flow Club, guys. Again, it's just $99. Get into the room. Get into the room, guys. We get so many deals every day, guys. We get so many deals. Below wholesale deals, guys, that make total sense. And we're negotiating. And we'll say, if the seller says, well, I want at this price point, we walk away from 3 deals. Why? Because we could. They'll come back. They always come back. All the time. Because why? Shit's going to get real. And then when shit get real, we show up because we're ready. So guys, get into the room, begin to develop those partnerships, right? So you can leverage, so you can ensure, leverage, and protect, guys. Those that are on YouTube, as well as Rumble, you can click on the QR code. If you're on Instagram, click on the link in our bio, guys, and go right to the Cash Flow Club, guys. Right to the Cash Flow Club, Cliff. Cliff has a phenomenal course on that, man, talking about the basics of real estate, and they're completely different than what you've learned in the past. With a new type of market, a new education is needed. Would you agree, Cliff?
Oh yeah. The market's always changing, so you got to switch it up what you're doing, because right now it's different. It's different.
It is. It is, guys. Well, guys, that's all we have for today, man. If you want to say anything else, man, before we leave, brother?
Nah, hey, keep watching the market. It's going to change every day. When we woke up this morning, we didn't think they was be running on the bank, so keep paying attention.
That right there surprised the crap out of me, guys. A run on the bank in the U.S.? God damn.
Top 20 bank.
Top 20. No bullshit. Top 20. That's crazy, guys. So you best believe those that are under that are 17, 18, 19, 20 and above, be watching them. Be watching them. Something may happen. Well, guys, man, thank you so much for your time. God bless you. You know how we end this thing every time, Cliff. I always say this here. Before you leave, and while you can, you see Cliff in his hat, his Nike thing, you see me in my SMU gear, take that damn picture and give it to your mama and them to say it with your chest. Holla at your partners. All right, guys, have a good weekend. Peace.
Bless God, give thanks. Whoa. Bless God, give thanks. Bless God, give thanks. Whoa. Bless God, give thanks. Whoa. Big God, big grace. Whoa.